Well, all right. Thank you for coming in this week, all you middle class investors. This is Seth Martin, your host, and I am looking at an S&P 500 chart that has made new highs and is on its way higher still. So this being wave one down, that's all off the table. Not many people I can follow have been able to explain all this kind of choppiness. It doesn't look so choppy here on a weekly chart, but when you go to a daily, it looks very choppy. It's hard to see how that's an impulsive wave, but turns out I guess it is. The Dow now is even at new highs, so there's nothing really left. Well, the NASDAQ may have topped, but there's nothing really, left to hang our hat on. You can see here that the Dow, this is the Dow Jones Industrial Averages, has exceeded, not only went through the gap. This gap was this yellow area here, but this is just very choppy. I mean, how do you get a wave one to, somehow there's a 3 in here? I don't know. I don't see it, but it is what it is. I mean, we can't argue with the market. We made our best guess based on the price action, and it just does what the market does. The market, fools the most amount of people the most amount of time. That's kind of the nature of the market. So let's look at 13-week Treasury. Let me get this. Let me take the studies off so we can get a better look at the price action. 13-week Treasury is still following this line here. This line right here. And as long as it's, as long as it continues to follow that line, I suppose that Fed will continue to raise rates. So this whole, the Fed is kind of out of phase. I think there's a lot of people talking about that, so I'm not going to spend a lot of time talking about it, but I think most people agree that the Fed is out of phase with the market, and really they shouldn't be raising right here. They should have been raising, 3, 4, 5 years ago. But they are, and a lot of times they're wrong. Their timing is wrong, but it is what it is. So you can see that the 10-year Treasury is getting very close to breaking out. We're over 3% now. We had a little pullback, but it looks like the pullback is done, and we're making moves upward, and probably will soon break out. This is probably the most important interest rate. So this is what I was telling you. If you're in bonds, you make money when this goes down. Okay, when it goes up, you're losing money in bonds. So you can see, since about mid-August, you've been probably losing money in bonds. Now maybe you don't have a statement yet and you don't know it, but trust me, your bond funds will be lower. Let's look at some of the emerging market. The Germany. These aren't really emerging markets, but you can see we've got this kind of downtrend. Let me go back to a weekly. It's pretty choppy, but it's still within the channel here. We can draw a channel kind of right along in here, like so. And I would say as long as it's in that channel, I'd be bearish. But it looks like it might poke out of this channel. If it does poke out, you might see it go up here and then maybe pull back to retest it and then take off. Let's look at Japan. The Bank of Japan had they're starting to do quantitative tightening now. So they've been selling bonds and kind of destroying their currency for a while now, and they pretty much said that they announced the other day that they were kind of done with that. So they're going to start quantitative tightening, which is reduce their balance sheet, which should dry up some of the free money, so to speak. The the money that's sloshing around in the economy over there. The UK is trying to get they announced the other day they're getting frustrated with the whole process. They still want a Brexit, so you got a little bounce there. I think to me, I think a lot of people think that the UK leaving the EU is going to be this big disaster. I think it's going to be a great thing for the UK. I think they're going to prosper by leaps and bounds, and I think the naysayers are just wrong. I mean, basically, you got crony capitalists and crony business owners that are, benefiting from that whole EU arrangement, and your average person over there is just drowning, in ridiculous rules that say they can't fish their own shores and all kinds of stuff like that. So, I think the Brexit's going to be a good thing for the UK. Of course, we'll see. But there's a lot of establishment people over there that are not happy about leaving the European Union. All right, let's look at the QQQ, because the Qs, of course, on this scale here, it's hard to tell, but the Qs may have run up, may have been able to count a full 5 waves up into this area right here, the high. Let me zoom in a little bit. Look at it. This area right here looks like it was the high. This is potentially a counter trend. Again, doing this on a weekly chart, sometimes you have to zoom in a little bit further. Remember, the market's a fractal, so the little fractals, the little waves show up first. So let's look at like a 30-day. So you can just about count 5 waves here, 3 down to here, 4, and then 5. And then this looks very choppy. Of course, so did the broad market. I mean, who knows? And may have completed right here. In fact, let's just put a little marker right there and say that we think maybe that was probably a little wave 2, potentially. And we'll see. So let's go back to a 5-year. Get a little marker right there. I don't know. There's we're coming up to the fall solstice, or we're there now, I guess. A lot of markets have topped during the months of September and October. It's just a time of the year. I don't know why it happens, but I don't think there's any kind of rationale by why it would happen during September and October versus other times. But the fact is, there have been many times during the past where the market has topped in September, October timeframe. Let's look at the 1929 top, took place in October. The 37 top took place in actually March, April, May, somewhere in there. The 1973 bull market topped in February, but it really got going in September and October. 2000 top was in March or so, as I recall. Maybe it started, well, I don't know. It kind of, the very top was in September, October. So the top in 2000, what was this, 2008 was about August, September. In fact, the Lehman Brothers bankruptcy was on September 15th. So here we find ourselves another September, coming up on October, and these are times in the past where the market has started its fall dramatically, and maybe this will be another one of those. Maybe not. Who knows? All right. Let's look at. I think probably some of the most interesting markets are probably gold and silver right now. Those are the ones that seem to be near a turn. So let's look at silver. Silver's, it's still sliding, but I think potentially this might be a good place to buy. We thought maybe this place right in here was, but then this didn't hold up support, and we got this new support area right here, and it looks like we're bouncing above this low here. So if that's the case, if you get another week, let's say next week this also finishes higher, then maybe you look for a place to kind of get into silver and go long or buy physical silver. When I bought silver, I bought it back here. Oh gosh, when was it? Might have been before that. It might have been right in here. Yeah, right in here where it ran up. So I bought it in here somewhere. It ran up and then it pulled back lower. And I actually thought, golly, I picked the wrong time to buy silver. So just bought more here, but then it ran up and I thought, I knew this area looked like a support area, but I actually didn't think it would come back below this. And I really don't think it's going to come back below here right now. I think long term it probably will. But I think we're going to see a high above this high before we break this low. Did I say that? Did I confuse anybody? I think we're going to bounce and make a high above this high, which is almost $21, before we roll back over and break this low. So that just means that I think silver is going to go up first before it comes back down. But I do think it'll make a lower low, probably around to the $7.50, $8 area. And whether or not you should wait until then to buy some, that's up to you. That's each person's unique strategy. But my fear was either the commission would be so high, or that there wouldn't be any physical metal to buy down there. Like if you waited till it got, like if you look at gold, let's look at a 20-year. Hold on a second. Is that all? I guess that's all I have. I thought I had a longer term chart, but if you look at gold, if you were to go back to 1999, for example, I don't know why we can't do that. Let me see if I can customize this real quick, because I think this is potentially an important, let's do a weekly max available. Add. Okay. All right, so let's go back up here and look at max. Still don't understand why that's not coming up. Maybe they've shortened it. It used to be that you could go back you used to be able to at least go back to 2000, but now for some reason I can't go back that far. Well, anyway, if you go back here, you can see there's this pivot low here, and where it looks like on the chart that gold could fall to is down here around $700 or $800. So same thing with silver. Silver could go as low as $7.50, $8. So anyway, but I think this is a good support area. They're at an area where it makes sense to probably buy some and then trade it up into this area around 1550. All right, the euro US dollar is potentially near the end of a move where we might start coming back down, but it might go a little higher. You can see here we've got a little decision area above here, so we might see the euro go a little higher, maybe up into this area. But I would say if we get a close next week below this week down here somewhere, then we're going down here first and then probably up. So there's going to be some interesting opportunities, I think, in the currency markets coming up real soon. But we're still many weeks away from that. and I'm talking like longer term moves, much longer. Oil, oil's trying to, kind of put in a top here, but it's the bulls are battling, and it could be that the dollar, the sell off in the dollar after its run up, its little run up, it could be causing something here in oil. I don't know. Sometimes oil is disconnected from the dollar. Sometimes it's correlated. It just depends on what else, what else going on. The NASDAQ 100, as we said, if you look at it on a much shorter term basis, let's just look at a 4-hour chart. You can see that, when you look at this, you can kind of see, some sort of pattern here. 1, 2, 3, 4, 5, and then this all looks very ABC-ish, overlapping. So we could have started the next leg down in the NASDAQ, in which case we should get a run into an area right around this pivot low here, and then an ABC bounce of smaller degree than this one. This one's fairly large. This next one, if it comes down to here, then the bounce is going to be something smaller like that, and then down. So we'll wait and see. It's hard to say exactly what that's going to be. Well, Tiger did it. Tiger won. First time in 5 years Tiger's won a PGA event. So good job, Tiger. All right. Let me show you Dinaric's chart. Dinaric's a guy that I follow sometimes. He does pretty good charting, and he shows this as this consolidation here was a 4, and that this was a 1, 2, 3 up to here, and then maybe this is a 4. Maybe we're going to pull down a little lower, and then that'll be a 4, and then 5. Whatever it is, I mean, we're getting very, very, very close to the end. You should just be vigilant. Pick out a spot, if the market starts to roll over, just pick a place and say, what, if it goes below that, I'm done. I'm out. That's really all you need to do. Don't worry about the money aspect. The real goal is to try to avoid the bear markets. I mean, when you're taking 30, 40, 50% losses in your account, it's really hard to make money over time. So just avoid those, okay? All right, you can see here the NASDAQ 100. You can kind of see they're showing a 1 down as an ABC. So maybe the NASDAQ's top, maybe it hasn't. Here's a close-up of that. I got an ABC up here to a W, X, and then a Y. It looks like Y is not finished, though. If this is 1, 2, 3, 4, although 4's gone back, maybe 4's gone back too far already, but there could be another leg up for 5. The NYSE is still very much underperforming. You can see here you've got this divergence in the new highs minus new lows. It's really dropped off on the NYSE. The Dow, they're showing a new chart for the Dow. They don't like the form of that, though. Same thing with the S&P 500. And then 30-year bonds are showing 2 is in and 3's making its way lower. The U.S. dollar, potentially 2 is in, and we're going to see some strengthening in the dollar, which would cause oil to drop potentially, and should cause the euro to drop. So if the euro's at a 2, or maybe goes a little higher than finishes 2, we should see a drop in the euro. It should be pretty substantial. You can see here they're talking about gold finishing this this consolidation triangle, or it may roll over and go lower and make what they call a flat. Either case, we're pretty close to a place where you need to be long gold to trade up here to this 1450 area. Same thing with silver. Silver looks pretty. They're saying they're a little bit more definitive. They don't even have an alternate case for silver, so silver you can expect to travel up into the $17.50 area before it even starts to sell off again. So silver maybe has the most upside potential. Let's see what the market's doing right now as we speak. The ES, which is let's look at hourly. The ES, which is the S&P 500 E-mini, or the future, is selling off. It's about -6 right now. So we have this high in at 29.47, and the market's continuing to roll over from Friday. So we'll see how things go. Again, been a lot of history of topping in September and October, and we're basically there. So be careful, pick your spots, protect yourself, and come back and see us next week. All right, everybody, take care. We'll see you later. Bye-bye.